Hello, welcome to another live stream with me, Christian Rauchenwald on this. I think we have Wednesday. Yeah, I think it's Wednesday. I hope you all had a great week so far. Yeah, I don't think we'll have too much to look into today, but as usual, we're gonna obviously give it a try, short or yeah, like give it a try and see what we'll find. I'm gonna share my screen. But there we go. We should go. There we go. Yeah. So we still have our GameStop put options open, so the options that we sold yesterday for $200 per option. Now they have a strike price of 22, and yeah, like first things first. Actually, before we go any further, as usual, don't forget the usual disclaimer that's also mentioned down below. Everything that I share in this live stream / video is my personal opinion and no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. With that out of the way, the reason for that disclaimer is obviously not just to protect me, but it's also to point out that I'm not always right. Nobody's always right. Like, for example, if we look at GameStop from yesterday, we can see that my assumption yesterday was actually that this is wave 1, 2, 3, 4, 5. Wave 2, and there we have the start from wave 4, wave 3, because it was quite a strong movement, which means I did not expect this movement. However, when we now look at the chart now, it becomes quite frighteningly obvious that it's actually 1, 2, 3, 4, 5, and that completes a 5-wave impulse to the top, and at least in my opinion. And then, which means we now are in that corrective wave 2 down here. And in that corrective wave 2, we can also see that we, even on the 50-minute chart with the naked eye, very likely have a 1, 2, 3, 4, 5 here, A, B, C, which means we are now in wave C of this A, B, C down. Now, if we were to label this, it would on one hand look like this, wave 1 and wave 2 in progress. On the other hand, it would look like this, that we have, actually going to use the auto labeling for that, although it's going to disagree. I think wave 3 will be this point. Doesn't really make a huge difference. And on the downside, it would look like this, although wave B would be this, and wave C is still in progress. Now, very often, not always, I'm going to remove the wave labels for now. Okay, went too far. So very often, but not always, need a different selector. So for the third time, very often, but not always, wave C will be at least 61.8% of wave A, identical to wave A, so 100% move, or at the most 17.83. Now, there are situations where it goes even further and whatnot. Yeah, we saw that in the NASDAQ, like I saw that in the NASDAQ just recently, and it actually caused me to, detect the wrong pattern and make an awful trade. But yeah, so as a result, we would expect that we get 5 waves down here, and at most we might have like 1, 2, 3, 4, although then it would need to be a diagonal and the push down here. So in other words, I personally expect that GameStop will actually go to 21.51 or the $20 mark. $20 mark also served as a huge level of support recently, and as such, it would kind of be the fitting point to bounce. I don't necessarily expect it to go down here because that would just be too much of a retracement in that case, but that doesn't mean that it's impossible. However, that also means that the 22 put options that I sold will, depending on how long this pattern takes to play out. So if we finish this today and maybe even go to 20 and then tomorrow we rally up again, everything's perfectly fine. I just pocket the premium and things are good. However, if by tomorrow we are still below 22, I would get those shares assigned here and would then, I thought about it. I mean, we will check in 9 minutes from now how the rate for the currently GameStop 22 put options is. Because so maybe if we can sell them for a profit, definitely wouldn't sell them for a loss. We could sell them and instead get the $20 puts. So since my assumption is that $20 will serve as a decent support to avoid assignment. On the other hand, right now the premiums are not visible anymore. But on the other hand, for example, right now or yesterday at close, the 22.5 call, if we sell it, would have had a premium of, I think, $370. So If we get the shares assigned, obviously, if we would go down to 20, then the premium for the 22.50 would be different. But if we get the shares assigned, our average would actually be 20 and not 22, since we got $200 premium for each of the contracts. And we could then next week just sell the 22 or 22.50 call option for extra premium. If it goes up, we lose the shares, but we pocket a couple $100 extra. If it goes down, yeah, that would then be another issue to consider. But considering the high volatility that GameStop has, the premiums should always be relatively high, and or not always, but as long as the implied volatility stays high, the premiums prices stay high. So selling puts and selling covered calls both has a relatively insane amount of premium. So if we consider that we basically got 10% of the investment that we would have to make already paid for just with the premium. And yeah, so that about GameStop. So I said, like, it looks like more likely, I don't know, to the naked eye. If you're wondering what I'm talking about, by the way, with that's wave 1 and that's 1, 2, 3, 4, 5, that's Elliott Wave Theory, and there's a book that you can grab. I'll just quickly switch the scene. So there's this book, Elliott Wave Principle. You can read it for free online if you use the link in the description down below. And if you follow that link, you also have the chance on the same site to order a physical copy if you want to do that. Personally, it's for years my go-to method for, how do I switch back? Oh, there, yeah. For my trading decisions in most cases. And you will not always be able to find a pattern, especially if we're in a correctional wave. So like, for example, this here doesn't have to, while this is a clear or looks like a clear 1, 2, 3, 4, 5, it doesn't mean that we will have, or that we should expect that this will also be an easy to read 5-wave movement. I'm just saying it looks like A, B, and that should be wave C, which means we would expect that we go lower than where we were. We already went lower, and based on, in quotes, experience, would expect to hit this or this or this. Yeah. Now, if we use, they're actually 3, 4. It also fits. Yeah. So if we use the difference between two moving averages, that's what we have down here. I'm not sure how I could open the settings here. That's chart settings. Yeah. It's something I already configured a while ago. That would equal wave 1, wave 2, wave 3, wave 4, and wave 5. Yeah, and actually, I mean, I didn't watch the chart yesterday in the evening anymore. Otherwise, I probably would have spotted that nice 5-wave movement, and then probably would have sold my options yesterday and took the profit. But yeah, like I've thought about it already for some time, since I noticed the pattern earlier in the day, that even if we go down here, the pattern still stands up, down, up. Yeah, and therefore, and my options anyway expire on Friday. So if we are below 22 on Friday, I'll take, or yeah, I'll get the shares assigned. I have 300 shares more, and the next week we should go up, which means I can also sell, like, instead of selling a very close covered call for next Friday, I could then settle for less premium. Again, premiums will show up in 5 minutes once the market opens, but could then go for something where I say, okay, I sell the $40 covered call, which probably will not pay by far as much, but it would also mean if the stock goes up, I benefit bigger. Or I could sell the relatively close covered call, miss potentially on some upside. But on the other hand, if we then visibly go higher, I could then, yeah, I mean, I would have to wait for the shares to get called away. So I think the only downside about getting the shares assigned is that I still would have to wait till the end of the week to see if they get called away or not. So if it frees up my capital or not to sell covered cash secured puts again. But yeah, anyway, so that's about GameStop. So the GameStop pattern. Now we also, yeah, like, let's check. There was not that much on Reddit for me to bookmark. Saved posts. Yeah, that's irrelevant for us today. That's a video from yesterday actually that I spotted, which is like somebody assuming that we have a strong support here at 21, and yeah, like 21 to 20, and yeah, which is actually, yeah, I mean, it's true, and that's why probably, I mean, if we look, we have the 50% retracement here at 2172, and then the 61.8 extension, so the minimum target area for wave C at our even if we use basic or old-fashioned trading methods or analysis methods, like saying, okay, that's a level of resistance / support for us right now, we would basically have 3 points that point towards, okay, we will not go below, like, I don't know, 21 would already be low, so like below that area here. And so we have 3 potential things that tell us this is a potential area of turnaround to the upside. So very likely that that's the case. Interestingly enough, instead of just identifying this as support or resistance level or whatnot, yeah, I mean, I haven't watched the video, and probably there's also something to learn there. But instead of just saying that support or resistance level, yeah, it's actually, we actually have multiple things that tell us, okay, that's the most likely thing, yeah. So doesn't mean that it has to happen, but we're not playing in certainties. We're playing in with certainties. We're playing with probabilities. Now that said, don't need that anymore. Just needed it as a reminder. Yeah, there's a new stock in the short squeeze subreddit that people assume or think that might do something. Not sure if I don't think I've looked at that one so far. Where did you go now there? It's again something below $1, so probably also on a, yeah, so with the naked eye that would look like 1, 2, 3, 4, 5, A, B, C, and now we're in the next pattern downwards. Although the question is, if we look closer, if we can see, yeah, like we cannot see anything that looks like, okay, definitely the end of a pattern and potential turnaround. So just from the wave pattern, I would stay out of this. Now, if this would not be 70 cents, but 7 cents or so, I would say, okay, you can get a ridiculous amount of shares for just $50. So why not make a gamble? But yeah, looking at that, yeah, apparently short interest is 25%. The company expects to recognize in revenue, blah, blah, blah. Yeah. Okay. Are they building energy storages for solar and so on? Yeah. So, I mean, it's a growing thing, or it's like something with increasing demand, but, yeah, I mean, expect like growth in revenue, okay, by 1,000% increase year over year. Okay, yeah, like, I mean, I'm gonna stay out of it, but yeah, you do with that what you will. So EOSE would be the ticker for that. Yeah. It's different if we compare it with other stocks. Like, I mean, obviously it would have been nicer to even notice the stock sooner. Like if we look at GWAV or GWAV, there we just have a visible pattern that roughly would be 1, 2, 3, 4, 5, ABC, and now the next 1, 2, 3, maybe 4 and 5 up. Plus the stock is much cheaper, where it is like if the company actually does any kind of turnaround. So not gambling on the short squeeze, but or I mean, a short squeeze could also trigger the movement, but if there is some kind of turnaround, we actually have a pattern that tells us, okay, the downwards momentum could be over. And even if it's not over, then it could be that this develops into an ABC pattern in which there would still be upside. Yeah. And the same goes, for example, for CRKN, where we also have in some form 1, 2, 3, 4, 5. I mean, 3, 4, maybe here 5, or 3, 4, 5. ABC. So where we have the assumption if the pattern holds, and since Elliott Wave Theory is about mass psychology, it means that obviously in single individual stocks that are not highly or not that much traded, it doesn't apply as much as it would in, for example, the whatever Nasdaq or I don't know, the German 30 or whatever. Yeah, so like in an index, it will apply better than in individual stocks. That's the core point. But from the look of it, we have a visible pattern here that doesn't look too bad, which gives us the reasonable, I mean, yeah, not reasonable, but the expectation that we could expect either that this turns into a wave C, which would take us at least till there, or that this might be wave 1, 2, which would take us potentially till here. Yeah, not overnight, but still, or we are wrong and it just goes down. But in that case, we anyway only throw very, very small amounts into those plays. And basically, if 1 out of, I don't know, 1 out of 10, 1 out of 20 of them works out, it's still profitable. So anyway, circling back. So we looked at that one. We're still in saved, yeah. Yeah, there's the next one to check out. Very high probability, 70%. Okay, they're already going up. So question is it worth it? Now, what did we look at? That was something with EOZ. Yeah, just remove the ticker. I don't need that anymore. Need to clean up my list of tickers at some point. So one thing we could have checked is if there are options, but for that, the stock would need to trade somewhere above $1 at least. So probably same scenario. Oh yeah, it jumped off a cliff. Like literally what happened here. So it was trading at $10 sideways for like years, and then it just jumped off a cliff. So so somebody is expecting it to go bankrupt, yeah, and I mean, considering the development, maybe, and we pretty much just have a little resistance, and here's some huge move up on 6 million shares of volume, yeah. So and now just down again. So that looks like a pump and dump, yeah. So like somebody pumped it up, and because there, I mean, theoretically that could turn into a 1, 2, 3, 4, 5, yeah. But dear God, no, that like just, yeah, that could be 1, 2, 3, 4, 5, and then we would have, but then the problem is that this doesn't look like ABC. That also looks more like 1, 2, 3, 4, and now 5 down, and then the pattern is already invalid. And yeah, like I'm gonna stay out of this one as well, yeah. But like, dear God, like what people are jumping into these days, and I really wonder. Probably looked at the 1 minute chart or what, like for his analysis, or maybe like let's check the 1 minute chart, but it's probably ridiculous. Yeah. Yeah, so he actually caught it right for himself. I think the screenshot shows this part. So here, down, spike, down, yeah. So congratulations. So I think it shows this part, down, spike, down. And another order just got filled, as you heard, yeah. So we're gonna check that out in a second. So I hope the guy was smart enough to sell it for 100%, or almost 100%, because if you got in here, so 17, so like yeah. But I think that ship has sailed. So, but interesting to look at, yeah. So remove that. Now I also had an order that just filled at yeah, at here. Where we're trading right now, so it actually fell exactly onto where I think that where it should. I'm gonna get rid of the pattern here. So my assumption is that move up here is in some form either, yeah, good. If it's ABC, I might have an issue, but I think that that's in some form 1, 2, and that we here might have wave 3 in progress that then has basically, actually, that would need to go somewhere here more likely, yeah. So, but it's okay. So the 1, 2, 3, 4, and then 5 up, yeah. So it's obviously another, in quotes, gamble stock. So here we bought for $50 a shitload of shares that either lose in value or go up. Now, the question here is where do we think it could potentially go? There's also almost no volume, or little, I mean, there's now a lot of volume, but in general, yeah. So we would expect it to go back to at least that, if it's ABC, although that we already reached. So, or the other option would be here, 8.8. Yeah, we bought so cheap, so we're gonna make our exit by 0.0088. So we're just gonna have to add a trail limit order. Now let's see if I do that still correct. So the limit price would be 0.0088. I'm gonna check on this one. So stop price is 16. And the limit price is the higher one, yeah. So 0.0088. Our stop price would be our where we entered. So a little bit higher, but yeah, so basically 0.0027. And we would trail that whole thing with 0.0088. So we would trail that whole thing by 0.0001. And good till canceled, and yeah, and obviously sell the whole position. So that if I didn't make a mistake, then yeah, that should be right. So 0.0088, 0.027, so it's higher than our buying, and then yeah, trail from there. So yeah, override and transmit. Yeah, so yeah, let's see if that works. Where is being held and monitored, yeah, but it should actually say active on Nasdaq. Okay, or actually that's not Nasdaq, but that's on the OTC tickers, yeah. So what was the second noise? Okay, now for the GameStop puts, we got $200, and if we sold them, so if we buy them back, theoretically the average is 156. So okay, now our trail limit order there is live. So if we're right and PUD touches this line, it will start to trail from down here. So if it explodes, it would follow up potentially. And so if it reaches this line, we theoretically cannot make a loss anymore other than overnight risk and whatnot. Yeah. If it doesn't reach this line, so to the downwards, there's no stop loss or whatever. It's just either the $50 turn into something or they don't. Yeah, just a second. Also need to. Okay, that's still working, but sorry. And yeah, so we have that now for the. Let's look at how GameStop now is doing. GameStop is now actually pushing up a little. Now the question is, if we buy them back, so we got $200 each, and if we buy them back, we pay 150. So we still have a profit. Yeah, so we're gonna buy them back right now.
Order filled.
Yeah, so it says they're filled now. Yeah, your blah blah blah. So we basically canceled out those puts, and we instead gonna sell our strategy builder, sell 3 pieces of for that of the 20 put. 170. Yep. Okay, now I just have to update my profile on, where is it? Yeah, there, the Theta Gang profile. So for those transactions, just a second. So first of all, we sold the free cash secured, or we bought back the free cash secured puts from yesterday, and we bought them back for 155 plus the commission. Yeah, so we still made around, since we got 200 something, so we still made around $150 on that trade, so that's okay. Instead of the 600 that we would have made if we stay above 22. Yeah, so that's the, yeah, so that's that. Now, additionally, we made another GameStop trade and sold cash secured puts with an expiration of, oh, I had the June 7. Yeah, okay, well, that's okay. Yeah, it's for next Friday. Missed a little bit of potential here because we still would have those here, although, yeah, I mean, wouldn't have gotten much for it. yeah, that was a misclick, to be honest. Yeah, I actually planned on selling the same weeklies, even if it would have just gotten us another $150 for this week. And then basically on Friday, switch them to next Friday. Now, this way we already have them for June 7. It's okay. The strike price is 20 and quantity is 3, and we got them for 1.695. Yeah, you can also enter 695, I guess. Yeah. So 3 of them. Yeah. So upload trade. Okay, so that should now be that. So if I'm just gonna check, so we have open our shares that I'm not keeping track of in, or am I? They would be separate. Yeah, do I have them here? PK plug. No, so those penny stock shares I'm not keeping track of. And we got open those which is closed. So we have opened the June 7, 20 put, 3 pieces. And then for June, we have opened the 100 call, where we have 2 of them. So it's in part of this risk reversal, the 100 call and the 20 puts in 2 pieces. And on top of that, we have the 10 put open, which is this one. And then we have our PK call, and we have the FIFA puts open. Yeah, so far so good. So yeah, so that misclick on one hand, yeah, on one hand we missed out now on a little bit of premium, because if we go down towards 20 this week, but not below 20, we would have pocketed the premium. In this case, it would have been like close to $60 this week, and could have then sold for next week. And for next week, the price for those would be higher, because if we go down to 20.5 or so, it would be basically like the same as if we would have sold this one or this one here. So like, yeah, missed out a couple $100, to be honest. But on the other hand, I mean, it's an extra 169 times 3, so 300 or 170, so $510 that we get here, and for next Friday's expiration. Yeah, so, and I'm definitely, I mean, I'm comfortable with the 22 puts as well, but especially if it's for next week, but I'm definitely more comfortable with the 20 puts. We'll also have to recheck real quick. I mean, very, very simple. So our capital exposure, so basically what we would have to buy if everything goes against us. Yeah. So, and then if we check, okay, we have basically the 20 put and 20 put for June. Then we have the 10 put for June. Then we have 1.5 combined for FIFA. The call doesn't count because it's in our favor. And then we have the 20 put for June. So, and the shares don't matter. So our total capital commitment would be $7,150. So just considering again, so, oh yeah, no, actually that was wrong. So there we actually have 20, 20, 20 plus 11.5 plus the 40. So the total commitment would actually be that. So, however, yeah, which doesn't, it says we still have 2.7K excess liquidity. However, we have around, yeah, so we don't have a full 2,000 spare wiggle room here to go for a 4th option. Now the question would be, is it worth it if I go to June 21st? Now the premiums are ridiculous, yeah. So to go for another $10 put or so, unfortunately, no. So yeah, we'll pretty much are then in quotes tapped out for now and have to wait. Actually have to wait for movement. So either we can sell those early, or yeah, or other than that, till June 7th to see if we have to roll some or get some assigned. Now what we can still do, however, is for example, if it's relatively early, I'd be okay with selling or closing them early if I can get at least 50% of the profit, or let's say 2/3 of the profit. So we received 169.5 let's do it like this, 160. Actually, you can, 169.5. And so if we buy it back for 0.55, we actually would secure in 2/3 of the profit. Yeah, so we can, for those puts, we can buy them back at 0.55. It obviously will not trigger unless the price moves away. So, and then we can cash in, so 3 pieces. That's what we have. So we can submit the order and say, okay, we're willing to buy them back for 0.55. Now, the closer we get to expiration, I'd actually cancel the order and then just let them expire or roll them into the next week with a profit. But if it were to go up, especially since that one is now for next Friday, so if the stock goes up today or tomorrow, and therefore the value of those decreases, so it becomes less likely that they happen, which means they get cheaper, which means we can buy them back. And if then this Friday or maybe on Monday I can already buy them back for that price, then I would obviously do that. However, I also have to, so we leave that order open. Basically, actually, instead of GTC, it should, however, be for the end of the day. So because we don't want to have the overnight risk. So because if overnight there is a strong upwards movement, that makes them worth even less, so cheaper for us to buy back, but we still have the pending order with that price, then we would actually miss out on profit. Now, for our risk reversal, we can do a similar thing, although there our price is obviously different. So we would buy, because here we basically sold the puts and had them pay for our call options. So which also means we didn't get the full $350, but we got $230 per option, which means we need to buy them back for less than $230 to still be profitable on that play. That would be 2. And if we, again, so we paid 3.512 times 0.33, so 1.15. If we pay 1.15, we basically actually, we should calculate it differently. I should actually take the 3.512 minus the 1.97 since it's part of the play, and then that times 0.33. We should buy them back at 76 or 75. If we can get it back for that price, so 0.75. So then we made 230, and only from the 230 we are saying, okay, if we can lock in 2/3 of the profit, we're willing to buy them back. In this case, we also will just submit them for the day. Likely not happening today, but still, if it happens, we're happy about it. That $10 put is a little bit different because it's just so cheap or like so low that buying it back early just doesn't make any sense. I mean, right now the price for that would be $12, so we already have 50% of the profit theoretically. But does it really make sense to like that one is just so unlikely to get into the money that does it make sense to close it early? Although on the other hand, the $24 premium we receive on the $1,000 that we would need to buy the stock, it's just 2.4% for pretty much like 3 or 4 weeks. I mean, which obviously is still a good return, but does it make sense? I mean, we could also here the issue is also that the commission makes more of an impact because we pay $1 or something in commission. So buying it back, if we buy it back for 12, we actually pay 13, which means we have like an $11 profit. Although we have that $11 profit now instead of waiting another 3 weeks for it to become $24. Tough choice. On the other hand, we can do the same thing. So if we say, okay, we bought it for 0.242 times 0.33. So if we can buy it back for, let's say, 7. So buy back, and that one for 0.07. And we pay 8. So then we have 2/3 of the profit secured. So in that case, there's really not much yeah, we also submitted as daily. So if there would be a run up now, we buy back and secure the profit. Should have done it yesterday, but I mean, I think that's also the benefit of the selling options side is we get paid premium. So as long as the stock, if the stock or if the price moves against us, I'm just gonna 1 second submit that real quick. Okay, so if the stock moves against us, we still got paid the premium, and even if we get the shares, we can sell the covered call. So now the question I raise, how right will I be? So we almost touched the 50% retracement line. Will we here somehow see that turn into some kind of like 1, 2 and our bigger push down? Will we bounce on the 21 mark? Will we actually go further down? If we go up from here, it would obviously be good because it would mean that I'll actually would get to probably buy back some of those options already and secure some of the profit, which then would allow me to either sell different ones for this Friday or already go for next Friday and sell again more for more profit. I'm always torn. I mean, the real options trading strategy, so it's called trading the wheel. So you have the money for 100 shares and then you sell a cash secured put at a price that you think will not be reached by the time your option expires. So you collect the premium. And the actual goal of the strategy is just to keep collecting the premium. So you hope that the price doesn't drop below, so you're not obliged to actually buy and you don't get shares. If you, however, end up with shares at some point, you then sell a covered call for the next week or next month expiration or whatever, to basically, if the price goes up again above the level, the strike price of your covered call, your shares are gone, but you still pocketed the premium plus potentially a profit. If you got the shares assigned at 20, but you sell the covered call at 22, then you would have 10% profit on the shares plus the premium, so not bad. But the actual strategy would be like avoid having shares and just use your money to sell cash secured puts to collect the premium. Yeah. If you have a bigger account, so I mean, in my account, when I started this one or when I actually started or migrated to this account, I just put around 10,000 there and wrong button. And with that, I'm obviously limited because with 10,000, if we consider I could at most sell one cash secured put for a stock that costs 100 euro. So since my 10,000 were in euro, yeah. Because if then the price falls below my strike price, I would have to buy for 10,000, yeah. Which, for example, rules out things like Nvidia, yeah. But if we look at Nvidia, so if you have the at least 100,000 in your portfolio, I mean, if you trade the old-fashioned wheel, then as you can see, if you would say, okay, for June or even for this Friday, so if you would say until Friday you believe Nvidia will not fall below 1100, you could sell that put option here and you would get around $820 in premium for basically the risk that within the next 2 days Nvidia falls below 1100. If it falls below 1100, in that case you would have to buy actually for 110,000, so 100 shares times 1100. And then you have the shares, and then the week after that you would then sell a covered call option. Yeah. So obviously as a percentage it comes down to roughly the same, and actually GameStop is even better because the implied volatility is higher. So if we consider here, basically the option premium is less than 1% that you would get. Even here where you would have to buy for $111,300, no, $113,000, sorry. The premium you get is $2,000, so it's around 2%. Whereas if you compare it with GameStop, because the volatility is higher, if you would buy or sell the immediate next one, here you have 22 or 2,200, let's say, capital commitment. However, selling that option brings you around $150, so that's around 7% or so. So instead of 2% on your capital at risk in quotes or capital that you commit to buying the stock, right now, because of the high volatility or implied volatility, you actually would get way more in premium. Yeah. Which means you have a higher return, which, however, also can go the other way if the stock moves down and then would keep moving down. So you really should pick stocks where you are comfortable or where you would be okay with holding the stock at whatever strike price you sold the option for, and where you believe that it will go up further after that. yeah, I mean, you might still be wrong and then end up with shares, because the issue is obviously if you get the shares assigned at 20, but the stock drops to 10, or yeah, you will not get a lot of premium for selling 20.50 or 21 call options, which means it will take you longer to collect more premium while your money is tied in the stock. Yeah, unless you're willing to average down. So that's one of the things. I'm fairly confident, but I might be wrong, that GameStop will not fall below 20, which means that's why I'm happy to sell the $20 strike price cash secured puts. The premium is good. Right now it's not that good anymore because we're a little bit above 20, yeah, but it's still good enough. So still beats other stocks in my opinion. And if I'll get those assigned, I still have the chance to basically sell the covered calls. But if GameStop were to drop, I'm okay to average down at the $10 strike price, which moves my average then, depending on how many shares I'm holding and whatnot, maybe down to 15 or lower if we consider the premium. And as a result, I can then again potentially sell covered calls with a more attractive premium and basically, even with the shares, make more profit. Yeah. It's actually the one thing about GameStop, I believe that we could see a big movement. Yeah. And that's the one thing where I'm actually kind of like on one hand hoping to get shares assigned, but then on the other hand, it's the general, not knowledge, but understanding that when you're trading the so-called options wheel strategy, you don't want to get shares assigned. So, but I think I found the compromise with what we did recently, what I anyway already shared. So to sell the $20 put options and get premium for that, but on the other hand, buy call options. So for any upside, we actually make a profit. Now, just out of curiosity, for example, right now those call options would be at a loss. Let's check what's their performance profile. We would need to be above 23.50 for them to be at a profit today. Obviously, on the last date, they would need to be above 100. But if we say, I think the next area for GameStop, if we look at it for a second, will, by the way, not sure if I still have the stuff marked. No, I don't have it marked. But would, by the way, then be if we put that extension here. Unless I'm wrong, happens, but if I'm not wrong, then I think the next area for GameStop will be here between 31 and 34, or 46 to 51. Yeah, I might be wrong, but that's where I believe. If that's wave 1, 2, then that would be the wave 3 movement, either at least till here or till here. And if that happens, then obviously, or if it happens within a reasonable time, so I don't know, let's say 15th of June or so, we'll have to set that to 100% move in that case, yeah. And so if we would go to 30, 32, it would already be, oh no, there it still shows an extra loss on 15th of June, yeah. That's how options decay. Yeah, so beginning of June, basically, if we manage to go, where do we have, let's say 9th of June. Yeah, so 9th of June, or a little bit before that, 8th of June. So that would be the time where those options, or where we would need to go above the 30 mark for those options to be in profit. If we reach the 40 mark, it's a couple hundred extra. If GameStop really explodes, yeah, like some expect, then obviously it would still pay off. So yeah, anyway, yeah, what else do we have for today? I think that's pretty much it. And so we checked that one. Let's quickly go back here. So congrats on the guy that called it, and hopefully he was in. Hopefully he also sold. Rheinmetall, it's like a German defense contractor, got bought by a politician. Just curious if that's, how is that a pink sheet stock? Like, so just because it's not listed there, okay, yeah, but oh, that one's tricky. But we can already see that would potentially be wave 1, 2, and then, however, yeah, we would be right now in a 3-wave move. So, and there we would have the next 1, 2, or yeah, 1, 2. And then question is, where's there 3, 4, 5? Are we still in wave 3? Was that 3, 4? And now we have wave 5, but it's an extended wave 5. So that's tough, a tough one. Obviously, Rheinmetall is one of the companies that definitely benefited from Russia's invasion in Ukraine. Would have been a no-brainer back then if people wouldn't, if I wouldn't have been occupied with other things to basically, I mean, you can see February was the invasion date, yeah, and then you can see the result. So it should have been a no-brainer there. It went from 20 up to 40, so 100% in like 2 or 3 months. So it should have been a no-brainer. Then we have ABC here, and now we have the next 1, 2, 3, 4, 5. Yeah. So, but question is, how far further will it go? Options are going to be too expensive, since if there are even options. But since it's 111 share price, so could buy call options, but that probably, yes, continue, navigate away. There are no options. Okay. So that's that. And buying the shares right now, I mean, even though a politician just bought in, the question is just, will we get a correction here first? So I wouldn't want to jump into that then. So I'm gonna skip that move. And what do we have? Then another squeeze candidate. Reddit is such a great source for things to look at. Okay, yeah, like, I mean, gonna stay out of that one. It's again, just, I mean, most of those squeeze candidates are businesses that are like either failing, and question is, do they manage a turnaround, and that are shorted heavily. Hourly chart, however, does give us some kind of 1, 2, 3, 4, 5 here, and then might be A, B, C. And then question is, do we get another push here? Yeah, although we're already close to $1 here in trading. So if there are options, I might get one. No options, yeah, but I'm not gonna trade the shares. So for those small short squeeze plays, I really prefer cheaper stocks and the ability to just get a bunch of shares for like $50 or $100, and then either they pop or they don't. Yeah. Where's our beauty? Yeah, like so. Obviously not a huge difference, but our position, at least for now, is in plus. Either we're right, and basically that was ABC, and we get another push up. You can see it also wouldn't pay out a fortune in that case. Yeah, so we put $50 in it, and if we reach our target here, then we might make I don't know, like $50, $100 profit. So if it really has a short squeeze and shoots higher, it might obviously be more. That's why we have the trailing stop thingy set up. But yeah, so yeah, circling back real quick. So that one's also a pass. Yeah, that's about shorting. So yeah, nothing relevant for today anymore. Like interesting, or not interesting, but cool. So yeah, so not sure if we'll, I mean, depending on the movement, might make another stream tomorrow. And depending on what happens, so if I get to buy some of my options back or not. Theoretically, I could sell the June put here again for a profit, and then actually sell the or buy that back for a profit, and then sell the one that I actually wanted to, that now pays $40. Yeah, let's do that actually. So let's do that. So we have the, what's the June 7 put? Yeah.
Order cancelled.
Yeah, order cancelled. So, and which means we buy back 3 pieces. We got 169. Okay, that's not a good price. So 169 would be 130. I'll buy it back 58, even though if the profit is smaller, yeah, but
order filled.
So now we canceled out those. Now on the other hand, we can sell 3 of those, or not 30, but 3, yeah. So, and 4, and it's done, yeah. Anyway, so that's then that. Okay, let's see if that filled.
Order filled.
Yeah, filled. Okay, so just have to update again. We bought back the June 7 puts, and we bought them back for 158. So for a $35 profit before commission, but yeah, that's okay. And then we sold for this Friday another 320, short strike 20, and those are those here. So 3 pieces, and we paid we got 0.45, so $120. Okay, so upload, and voila. And with that, we have a sign, another sign. We have open. For Friday, those 3 20 puts, and that we can enroll into next week. So, but that's not too bad. And then for June, the risk reversal and the $10 put. And then we have our PK for June long call. And then we have for FIFA, that's the last one we can look at actually. So would be for those here. So I think there we had it dropped today a little, and might be that those options will trigger. We'll see if looks like we bounced on the 38.2 retracement, but we see if on Friday we're below 1, then actually I will have to buy 100 shares for $100. But we received $50 premium, so our average for that would be 0.5, so that would be okay. And then I would probably instantly sell a trailing stop loss, or set a trailing stop loss to basically, if we go up, sell them at a profit. If we go down, sell them at ±0. So yeah, so question is what happens here. So, and if we, last but not least, check here. So if this would be, yeah, then potentially it could go further down. Obviously, I mean, it's a penny stock, but we'll see. Yeah. But to be fair, so we have a $150 capital commitment here. If we fall below 0.50 by in June, yeah, the expiration date is June. But we also got a total of $70 in premium, which makes our capital commitment effective actually $80. So we got 50 and 20, so $71 in premium. So I said we have an $80 commitment. So if we fall below 0.50, we get 200 shares with an average of 0.40. So still not too bad. Yeah, but yeah, that's then pretty much it. So I'm going to end the stream and get some other work done. Curious to see how GameStop will develop for the rest of the day. If maybe, I mean, right now, last thing, switching back. Yeah. So right now we had a small recovery, which actually helped us to get out of our wrongfully bought June 7 puts at a small profit. But now it actually, yeah, I mean, could have waited a little bit with buying the Friday puts, because they are now getting a little bit more expensive. I mean, not that it makes a huge difference, but the $20 put you see now increased $1 or $2. So, but yeah, I think, yeah, like things will turn out as expected. I mean, could be that we have the bottom here, but I think we might get another push a little down, at least till here. And worst case till the $20 mark, so which still means my options expire and I just pocket the premium and sell new ones for next week. And yeah, let's see how it actually turns out. Yeah, with that I'm gonna sign off and then see you all potentially tomorrow, but only if there is enough to cover. So yeah, most likely we might have a stream on Friday then to see basically kind of like how our options will finish the week. And yeah, that's it. So thanks for tuning in. Have a pleasant rest of the day. See you in another stream. Till then, bye-bye.